Hey everyone, it's Alissa Coram here. Now, we talk a lot about rules and psychology with investing, and that's because the two are very interconnected. So today, I wanted to talk about the psychological domino effect of making bad trading decisions. I mean, we've all been there, but more importantly, what I want to discuss is what to do to break this cycle. So the reason why I picked out this topic today is because I read hundreds and hundreds of messages from investors on IBD Live every single day, and this is a real concern for many traders out there. Now, there are many actions that might be considered a bad decision with trading. Ultimately, the worst trading decision you can make is letting a small loss turn into a big one. Now, as a quick aside, for a detailed discussion on that topic, make sure you check out my other video titled, "This is the Biggest Trading Mistake." But anyway, what led to that ultimate mistake? Maybe you bought a laggard stock in a downtrend on the cheap, thinking it had bottomed. Maybe you bought a stock extended, so your timing is off, and the stock could still be holding above a key support level like the 50-day line, but you're still down 10% or more. Whatever that poor decision was, this is where that domino effect can start. By rationalizing your decision process to buy and your decision process to continue holding. The conversation in your head might go something like this: well, it's oversold, so it's gotta turn around, right? Or, I bought extended, so I'm just giving this one a little bit more room. Or, I'm just being patient with this one. Whatever it may be, if you're down big on a trade, psychologically, it can be really hard to come back from that. So, that first poor decision on the buying side has made a big impact on what happens next. And there's a couple of scenarios that could play out. You could start making your money back and develop a really bad habit from that. You could continue holding and hoping and lose more money, or you could ultimately capitulate and sell for a huge loss. Now, none of those options are good ones, and we never want to be put in that scenario. But what each of those things could do is influence other bad decisions. You could keep making the same mistakes because you haven't learned from that mistake yet. And if your portfolio is down big, you could start making risky decisions with your money to try to make up for it and start making those gains back. You could give up on your rules because you think they don't work for you and try to find new rules that do work for you. But without that discipline, you could just have the same problems with a different set of rules. Now, selling a stock for a big loss isn't fun, but if you find yourself in that scenario, you just need to take your lumps and learn the lesson from next time. As David Ryan said in my recent video with him, that a loss isn't a loss unless you learn from it. It's so much better to just learn from that mistake than to rely on luck to try to dig you out of that hole. Now, another thing you can do to try to break that cycle is to conduct post-analysis to figure out what you're doing wrong. Is it that you're buying stocks in downtrends or trying to buy during a correction? Are you holding on to former leaders? Are you buying extended? To break that cycle of making bad decisions, you need to learn from those mistakes and, of course, stick to your rules moving forward. Something else you might want to consider if you're just really out of sync with the market is first to recognize that. Step away for a little bit. When you step away, make sure you get back in little by little. Don't take on as much risk. Start with smaller position sizes. And then once you are getting more back in sync with the market, then you can start to add on more exposure. In my post-analysis, one of the things that I'm trying to work on is to take more profits into strength when I have solid gains. This is something that is so hard for me because I want to hit that home run. I'm young in my trading career, so I can take on a little bit more risk in that perspective, but I have realized that it is better to lock in some gains into strength when it feels uncomfortable and when you feel that greed creeping in, rather than waiting for some of those other sell rules to trigger, like a break of the 10-week line, even if you do have a big winner on your hands. So I hope you enjoyed those trading tips, and if you want more videos like this, please make sure you subscribe to my channel because I have a lot more in the works that I can't wait to share with you. Thanks so much for tuning in, and we'll see you next time.